Welcome back to PNG Trends Burner. In this video, we take a closer look at the highly contentious issue of the Kina's devaluation. Papua New Guinea's currency has experienced a significant depreciation, sparking a national debate about its economic impact. Is it a recipe for economic disaster, or a chance to jumpstart exports? Here, we analyze the fiery exchanges between the Marape government and the opposition as we dissect the Kina's devaluation and its impact on your wallet. Prime Minister James Marape recently addressed the nation, acknowledging the Kina's decline. He emphasized that the previous policy of pegging the Kina artificially inflated its value, discouraging exports. Prime Minister Marape stated, "The Kina was artificially pegged in 2014 when Don Polly was the Treasury's finance minister, probably with good intentions to maintain its value. But over time, it became a demotivation for exporters to bring back their export earnings as the Kina became more expensive and not on its fair market value. We have now unpegged it, and Treasury and Central Bank are observing closely to ensure the depreciation of the Kina does not trigger extraordinary inflation over our 2024 inflation focus. If it does, we will intervene. Last year, we made well over 60 billion Kina in exports, but the return to our economy was much less. Imagine a child learning to walk. Initially, the parents might hold the child's hands to prevent falls. This is similar to pegging the Kina, it provided support but limited movement. PM Marape is, probably, right that a strong Kina could disincentivize exporters from bringing earnings back. But, is Marape prioritizing exporters over ordinary Papua New Guineans? Think of the child again. If the parents hold the child's hands too tightly, the child might not feel the need to develop its own walking muscles. Now, the government has unpegged the Kina, essentially letting the child go. This allows for a more natural market value but carries the risk of a free fall, Kina depreciation. Here's the key difference in the analogy: a baby falling is inevitable, but inflation doesn't have to be. Marape acknowledges the risk of extraordinary inflation and promises intervention. This is crucial. If Marape as the PM and acting treasurer does not get it right, and his records have shown that, taxpayers will hit hard. Unlike a baby learning to walk where falls are expected, the government needs to act swiftly to prevent uncontrolled inflation, which can be highly damaging to the economy. Imagine the baby falling and injuring itself. That's what uncontrolled inflation can do to PNG's economy. It will be nasty. It is better to play it safe than taking the risk of Kina depreciation. Opposition strongman and alternative Prime Minister, Allan Bird, expressed strong reservations about the government's approach. Bird pointed out, while devaluation can make exports more competitive, Papua New Guinea has not made sufficient investments in boosting production capacity. This raises concerns that the benefits of devaluation may be limited, while the cost of essential imports, like food and fuel, could rise significantly. This has the potential to exacerbate inflationary pressures and negatively impact Papua New Guinea's most vulnerable citizens. Allan Bird said. PM Marape, in his response to the concerns raised by our ordinary people affected by rising cost of living due to the effects of the depreciating Kina and inflation, leaves much to be desired. The PM is telling everyone that we have to wait for the big mining and oil and gas extraction to commence operating in order for the people to get some relief. Are we back to short-term pain for long-term gain again? If we had allowed Porgera to operate, that would have meant an additional $6 billion in foreign exchange we would not have had to borrow. Not to mention its multiplier effect on other businesses. That's what the PNG economy is experiencing. Unfortunately, a government has borrowed 32 billion Kina in 5 years. This number equals all borrowings by all governments since 1975. Our total official debt is 64 billion Kina, and half of that was borrowed in the last 5 years. PMJM tells us GDP grew by 30 billion Kina since he took office. Well, debt grew by 32 billion Kina in the same period. This does not include other debts currently sitting off the books. See the video linked above for PNG's off-the-book debt. Economists caution that the devaluation of the Kina is a complex issue with both potential benefits and drawbacks. While devaluation can make exports cheaper, increasing their competitiveness in the global market, it can also lead to higher import costs. This can have a ripple effect throughout the economy, potentially pushing up inflation and eroding household buying power. Deputy Opposition Leader James Nomane highlighted another critical aspect of the debate: Papua New Guinea's national debt. Mr. Nomane argued, the devaluation exposes the underlying issue of excessive government borrowing. The government's focus on funding large-scale projects, without due diligence or a clear path to economic return, has placed a significant strain on the national budget. This, in turn, has weakened the Kina's position. James Nomane said. The devaluation will increase the cost of imports and directly increase domestic prices. The continued price increases in basic goods and services, like rice, tinned fish, fuel, water, electricity, etc., will raise inflation and make the cost of living crisis worse. Marape has been fixated on borrowing to fund Connect PNG and other dubious investments that enrich a small group of his cronies at the expense of the nation. Marape seems to imply that the government can tell the central bank what to do. This inferred control is dangerous and is an affront to Sir Mekriha's exemplary reforms for total independence of the central bank. By melding the Treasury and central bank, Marape is preempting the decisions of the central bank in terms of interest rates and monetary policy. Devaluation will raise inflation and the cost of living, lower creditworthiness, and reduce investor confidence. We will not attract foreign direct investment with devaluation, sending the PNG economy into a spiral. The devaluation is an indictment on the Marape government, showing total incompetence, and it exposes the rot in excessive borrowing for self-interest and pressure to repay and the concomitant impact of debt on the PNG economy. Allan Bird and James Nomane, leaders of Papua New Guinea's opposition, raise concerns about the Kina's devaluation. Bird argues that without increased production capacity, devaluation's benefits are limited, while essential imports could become significantly more expensive. This would worsen inflation and hurt ordinary citizens. Nomane emphasizes the underlying issue of excessive government borrowing, which has weakened the Kina. He criticizes Marape's spending on projects with unclear returns and his attempt to influence the central bank, fearing a loss of economic independence. Both Bird and Nomane paint a grim picture of potential consequences if not addressed carefully. In hindsight, the unpegging of Kina and its impending devaluation presents a significant challenge for Papua New Guinea's economic policymakers. It is crucial to carefully consider the potential consequences and implement measures to mitigate negative impacts. Transparency and open communication between the government, the private sector, and the public will be essential in navigating this complex economic landscape. The Kina's devaluation presents a double-edged sword for Papua New Guinea's economy. While cheaper exports could boost competitiveness, the unpegging raises concerns. A devalued Kina might lead to a rise in inflation and the cost of essential goods like food and fuel. This could disproportionately impact vulnerable citizens who are already struggling with rising living costs. Careful government intervention and open communication between all stakeholders are crucial to navigate this complex situation and mitigate potential negative impacts. What do you think about the Kina's devaluation and its impact on Papua New Guinea's economy? What do you think about Marape's unpegging of the Kina? And what are the impacts of a devalued Kina, inflation and price of goods and services? Subscribe to PNG Trends Burner, stay informed and engaged in this critical national conversation. Thank you for joining us.